The world is rapidly changing. The world is increasingly globalized. Populations are aging. Technology is advancing at an unprecedented pace. Density are demanding social justice. Environmental damage is cause for alarm. Artificial intelligence and improved data allows for highly customized policies. These factors present opportunities and risks for the insurance industry. Insurance businesses that look to the future will be best placed to gain from opportunities while also being able to set industry standards. This presentation looks at 7 key areas: digital assets, data loss, social media, environment and natural disasters, social equity and justice, space travel, and the pandemic. The value of digital assets, including cryptocurrency and blockchain, are predicted to grow in the next decade, notwithstanding current volatility. As technology behind these forms of finance advance, the creation and transfer of digital value will be easier. The Deutsche Bank report on the future of finance in the coming decade looked at the prospect of cryptocurrencies and concluded that it may change the future of cash and cards, with trillions of pounds in transactions every year. Transacting across cyberspace comes with a host of risks, and it provides insurers with opportunities to provide policy that helps protect the insured. Digital assets are popular among the younger generation, who may not recognise the role that insurance plays. Given the unique nature of digital assets, together with a market of new potential customers, there will almost certainly be a need for new, bespoke insurance products providing unique solutions. Data loss insurance isn't exactly new. However, traditionally, theft insurance has dealt with the insured assets, whereas cyber insurance has dealt with liability associated with network security and cyber attacks. Data is gold in our digital world, and in the emerging digital asset space, there's an opportunity to provide AI-backed policies that cover one end of the loss to another. There is also an opportunity to break into emerging markets. Take, for instance, Africa, which now more than ever is looking to digital solutions to increase productivity and drive development. This would be a great market for quality insurance products, and with advances in cybersecurity and artificial intelligence, insurance exposure to risk from costly claims can be greatly reduced. It's only 18 years since Facebook was created, yet today, an estimated 58% of the world's population spend an average of 2.5 hours each day on social media. Despite the many benefits, there are also some downsides to social media, including privacy breaches and bullying, with brands under increasing pressure to curtail such incidents. One of the emerging problems is associated with so-called influencer activity. Influencers increase sales and brand awareness in exchange for compensation. However, things can and do go wrong, which can expose the brand influencer to reputational and financial harm. Insurance companies are well placed to benefit their business by providing influencer liability insurance to help protect social media influencers from potential legal liability associated with their online activities. Of course, no one can say for certain how long the influencer trend will last, and so there is a future risk to the insurance industry of having a product that is obsolete. Nevertheless, this type of insurance could be lucrative and worth the investment. Each year across the world, natural disasters destroy assets running into multiple billions. Less than half of this damage is insured. While the insurance gap has diminished in recent years in industrialized countries, there is still a considerable gap in developing and emerging countries. With increasing data for modeling the risks and factors that affect those risks, insurance companies have an opportunity to close gaps between the insured and uninsured, while still making a profit by tapping into new markets. Moreover, with millennials and Gen Z looking favourably at companies with good ESG, such ventures will not only benefit entire economies, but also have reputational advantages. In the wake of Me Too, Black Lives Matter, the killings of Bieber Henry, Nicole Smallwood, and Sarah Everard, to name just a few, the appetite for social justice is perhaps greater than ever before. The problem is, when it comes to discrimination, the insured tend to be the employers and organisations, which creates a two-tier system as it leaves some victims with no redress. A specific social justice insurance could be the answer. A further oversight is in health insurance for the menopause, which often is excluded from policies. This is a missed opportunity, as with life insurance, women could insure against a risk and premiums that could be based on actuarial data, which would shield insurance policies from overexposure. There have been significant advances in space travel. It is estimated that about 60,000 people will go to space over the next 10 years as the cost of space travel falls. As with all forms of travel insurance, space travel is a potentially lucrative form of insurance. There are, however, risks associated with space travel, given the great many unknowns. Space debris, risk of collision, and lack of data to use for effective modelling. Nevertheless, if air travel has anything to go on, the appetite for space travel will grow, which means that this is a part of the industry that will continue to grow. The magnitude and impact of the COVID-19 pandemic on businesses cannot be underestimated. The International Monetary Fund announced that it believes the cost will rise above its 12.5 trillion estimate. The risk is that payouts can be so large that they exceed income from premiums, which would leave a deficit. However, where previously it was harder to convince a company to buy insurance that protects against something that hadn't occurred in their living memory, the memory of the pandemic is at the forefront of many business decisions. One possibility for the insurance industry that would shield them from the risk while creating opportunity is a private and public sector partnership and a solution that agrees to only insure against a part of the risk.